Hey, it's Clay at claytrader.com. This will be the weekly review of the Power Profit Scan newsletter, which is one of the components of the subscription service that I offer at claytrader.com. The other component being the live trading chat room. But as far as the newsletter is concerned, I email it out every weekend. And over the past several months now, I've been doing reviews of the scans. And I just like to do it. Gives people an idea of kind of what you can expect, and also just I would like to think sets expectations in line with reality, especially as far as, a couple disclosures here. The first one being, I am not trying to imply, I am not trying to come across, in fact, you'll see in this very video, that every single alert that is sent out is a winner. If you've watched past videos, you've seen I've shown plenty of sloppy trades, plenty of losing ones. But the point here that I want to really convey is this is why risk management, risk control, risk analysis is so important, because when you analyze risk, when you understand how to properly handle risk and be disciplined, yeah, you're going to have losses. All traders have losses, but they're going to be controlled losses. And when I say that losses happen, well, on the flip side of that, winners also happen. So when those winners do come along, you want to make sure that your account is in the proper area where it can take advantage of the winners to the full extent, wipe away the losers and keep an overall general trend of account growth. And the second part to point out is that we are going to be talking about the newsletter from the week of October 1st. Yes, that's a while ago. Why are we going so far back? Well, two reasons. First, it's simply just giving the chart plenty of time to play out. That way we can see what actually happened with it. And then second, it's just fair. I don't want to, have paying members pay for something and all of a sudden, oh, what I just paid for is free on YouTube all of a sudden. Obviously, that doesn't make much sense from a fairness perspective. So that is why we're going back into the history of things. What you're looking at right now is just behind the scenes. After you would log into your account, this would be the members area. Then you can go and click on the newsletter specific part. And then it just gives you access to all the newsletters that have been sent out for the past 3 to 4 months. So that's where we are right now. That's what you're looking at. So let's get started. Before we get to this, just kind of one point of emphasis, just keep in mind the prices that we're talking about. Right now, it's a $30 stock. And the next couple we look at, you'll see that as far as, hey, Clay, what kind of price range stocks do you cover? We cover it all. I cover whatever I think gives a high probability of working in our favor. So if that is a penny stock, if that is a $10 stock, or if that is a 30 or sometimes even higher stock, then that's what I'll cover. So we cover the entire gamut. I'm not concerned about the price. I'm concerned about probabilities and just how many things I like, dynamic wise from a charting perspective. So with that being said, you can see right here, threw it into the breakout coming, kind of question category. And this was ticker symbol LB. And you can see here, had some nice stair steps moving upwards, and then was clearly struggling with right around this area right here, which I denoted as the key break. So let's see how this one played out. As I'd mentioned at the opening, I send this out every weekend. So what you see here is what the chart looked like going into the weekend. And the next candle you'll see will be the Monday morning when the market opens back up. So we were looking for the breakout, and let's see what happens. So on Monday, the breakout did indeed occur. And let's just keep on going. And then that occurred. Have you ever been there before? It only gets better. And then after that, which makes it a losing trade. I mean, I don't know how anybody would have withstood that. I'm assuming people would have been stopped out. And then, of course, after people get stopped out, whoop, there it goes right back up. So it happens. You're not alone if you've ever been stopped out of a trade, or you get out and then all of a sudden it goes right against you. Hey, welcome to the world of trading. And that's just how things go. But that's you'll see why we need to keep losses controlled and why we need to manage risk properly. But yeah, this was it started off nice, but then it just totally got crushed back down. The general markets in October were very rough, but no excuses. It was an alert that just didn't work out, and that's what happens. That's no shame here. I'm not, like I said at the beginning, going to try to come across like every single alert is going to be a winner. But hopefully, if anything, we can turn this into a little real-life lesson using real-life examples of why risk management and risk control is so important. But yeah, LB turned out to be a flat-out loser, and then all of a sudden it shot right back up. So I like that little kind of nasty little twist, because one of those things that kind of just makes you laugh, because I think all traders have been there. The next alert to talk about, put into the pullback play category, and this was ticker symbol GNC. Now taking a look at the price, we are below $10 and below $5. So we're covering quite the gamut here of price ranges. But as you see, made a very, very nice move, and now it did start to show a little bit of signs of weakness with the pullback. So I was just questioning, and I pointed out and mapped out that area right there to keep an eye on, right around 390-ish. So let's see if the price pulled back enough or not. Again, here is what the chart looked like over the weekend. So the next candle you'll see will be Monday, but there's that 390-ish line down there, the green. So went up a little bit and then pulled back, and you can see right there, opportunity at an entry point. And you'll see several more opportunities as the price just hung right around that area. Made a nice little move there. Then decided to do a little bit more consolidating. Again, lots of opportunities for entry points, but unlike the previous one, LB, you'll see that there is no significant crashes or pullbacks or whatever. And then all of a sudden the party started to wake back up, and that move there occurred before it did roll back over. But that was a 19.2% profit window. Am I saying anybody played it perfectly and got 19.2? I'm not saying that. But even if you played it halfway decent and you got 8, 9, 10, 11% out of it, as I always say, and I'm going to continue to say, walk into your local bank and ask for 8, 9, 10, 11% in the time span of, I don't know, what was that trade? Maybe a few weeks. Excuse me, Mr. Banker. Excuse me, Miss Banker. I would like 11% on my money in the next month. They're going to think you're crazy. They'll probably get the police called on you. They're like, what are you talking about? So I want to keep this in mind because, sometimes people only want to see, 3-digit gains, but, keeping things in perspective, 11, 10% in just a matter of a couple weeks, you're not going to get that at the local bank. But overall, nice pullback to the support, and then got the nice bounce up to, the higher areas of the chart there for 19%. The final one we'll take a look at is ticker symbol EARS, was in the volume alert category. And once again, you look down here at the prices, and we're talking about a stock that's trading for down below $1. And it could be argued that, you were late to what ended up happening, but late is better than never, especially when here. What do I mean by late? Well, yeah, technically, people could have gotten in down around this lower trend line here, but it is what it is. Like I said, when you see what happens, I think everybody would be perfectly fine with being quote unquote late to the party. But yeah, if anybody did get it down at that trend line, congratulations. You beat me to it. But like I said, I'm perfectly fine being late to parties like this. But as you see, that was just a volume alert category. The volume did start to, come back to life. So as I questioned right here, hey, are things trying to wake back up? So let's see if things woke up or not. So again, here's a chart over the weekend, and let's see how things started to play out. So on Monday, got the break, pulled back a little bit. Gave people, if they maybe missed the break, an opportunity to try to get some on the pullback. Hung around that area again. So not exactly a clean break where something breaks out and then just continues to go. This was, a break that occurred and then consolidated a little bit. And then all of a sudden, there's where the party really started. Volume came pouring in. Pulled back, consolidation, nothing nasty though. Then another second round of movement came, and then even a bigger round of movement came, and back down it finally went. But that move right there was good for 418% profit window, all in the time span of essentially a couple of weeks. And once more, not saying anybody played it perfectly for 418%, but let's say you played it only half right. I mean, you screwed up half of the trade. At that point, you're still looking at 209%. So, 209% on a trade that you screwed up halfway. Let's say you screwed up like 75% of the trade. That's still, you're looking at 100% move. So 418%, my point is there's a lot of wiggle room within that sort of profit window for people to take advantage of wins. And circling all the way back to the first one where it was a loss, yeah, assuming you were disciplined and you got out, then this one, GNC, the previous, things work their way out. Because, yeah, losses happen, but winners also happen. And this just happened to be a big winner. But the power of charts and, nights, the charts picked up on the volume, and then, definitely got a huge breakout there. Like I said, sure, technically maybe a little late to the party, but, hey, I'll take it. late is better than never, especially on movements like this. So EARS, a move of 418% out of the pattern breakout. So hopefully that helps you, kind of giving you an idea of what you're going to get. Here are the other components of the service. I did, already mention the live trading chat room, but there's lots of other things that come with it, including an app. So it's not like you need to sit there and be by your computer 24/7. You can keep in touch with everything no matter where you're at. So if you are interested, you can just go to claytrader.com/inner circle, or just at claytrader.com. You'll see up at the top of the page, there's an inner circle area that you can just click on. As far as the cost per year, let me say that again, per year, is $99. Not per month like some people, not per quarter or anything like that. $99 per year. If you do the math on that, it breaks down to $8.25. Or if you do it, the math all the way down to just per week, the price is $1.90 per week. Less than a cup of coffee. So if you can sacrifice 1 cup of coffee per week, then no excuses. You can easily afford the subscription. As I always tell people, over the time span of 12 months, I am very, very confident you'll get at least $99 worth of value. Sure, maybe I'm setting the bar kind of low, but the point is I just want to keep things very, very fair from a pricing perspective. And I think, $1.90 per week is definitely on the fair side of things. Any questions or anything? By all means, leave those down in the comment section below. Reach out to me through the site, whatever. Reach out to me on social media, whatever makes your life easier, and I will be happy to answer any questions that you have. But yeah, hopefully you decide to give it a try, and I see you on the inside.